Today on the Bitcoin 5, STRC's stress test, real estate giant Cardone Capital purchase, quiet Bitcoin ETF accumulation, smarter web latest, and JPMorgan as $165 billion warning. Like and subscribe so you get this daily Bitcoin briefing in your feed each day. Let's go. Before the stories, the Bitcoin price check. Current price about $63,600. Bitcoin has pulled back 14.8% over the past 4 weeks from about $74,700, marking the most significant near-term correction after the spring rally. The monthly decline overshadows the modest 3.4% weekly dip and the relatively flat 4-month performance. Strategy's STRC instrument first real stress test. Strategy's innovative STRC preferred stock crashed to $82.53, down more than 17% from its designed $100 value, as Bitcoin's decline puts the company's treasury model under unprecedented pressure. The instrument, which pays an 11.5% annual dividend, $1.21 billion yearly across 104.9 million shares, worked flawlessly when trading near par, but the current discount creates a brutal feedback loop. Strategy has completely paused STRC issuance because selling below $100 permanently increases dividend obligations per dollar raised. But the bigger picture is widely misunderstood. STRC closed at $88.59 as buyers stepped in after the leverage liquidation cascade. As STRC trades down, the effective yield increases, making buying more and more attractive for investors. The stress on STRC trading does not affect Strategy's underlying balance sheet, so both Strategy and the Bitcoin network are protected. As STRC recovers back to par, the market will gain a greater understanding of the true anti-fragile nature of STRC and the wider emerging digital credit asset class. Real estate giant Cardone Capital buys the dip. $17.70 was deployed to purchase 282 Bitcoin. The move signals continued institutional appetite for Bitcoin accumulation despite near-term volatility, with major capital allocators viewing sub-$65,000 prices as buying opportunities rather than exit signals. The purchase adds Cardone to a growing list of corporate treasuries treating Bitcoin pullbacks as strategic entry points. While retail sentiment has turned cautious amid the 15% monthly decline, institutional buyers continue demonstrating conviction in Bitcoin's long-term value proposition. The broader point is not the headline alone, but what it tells us about Bitcoin's place in the financial system. Morgan Stanley ETF accumulates $25 million in Bitcoin. This week, while broader markets show selling pressure, Morgan Stanley's Bitcoin ETF has moved in the opposite direction, acquiring over $25 million in Bitcoin so far this week. The accumulation pattern directly contradicts the narrative of institutional flight and suggests sophisticated allocators are using the correction to build positions at more favorable valuations. The buying activity demonstrates the bifurcation emerging in institutional behavior. Long-term strategic holders adding exposure, while shorter-term traders reduce risk. Morgan Stanley's continued accumulation provides a counterweight to fears of widespread institutional abandonment during Bitcoin's consolidation phase. Smarter Web updates. UK Bitcoin Treasury Strategy. Smarter Web CEO Andrew Webley provided his usual comprehensive weekly update on the UK Bitcoin Treasury Company's progress, highlighting successful capital raising of nearly $250 million since its April 2025 IPO and recent uplisting to the London Stock Exchange main market. The company has become one of the UK's most actively traded newer retail stocks with analyst coverage from TD Cowen. This week, Smarter Web raised $299,091 through its ATM facility and appointed Oliver Hewitt as CFO. Smarter Web are also on track to be one of, if not the very first, Bitcoin treasury companies to launch the first digital credit perpetual preferred product outside of the US. As the UK is the second largest capital market globally, as the leading Bitcoin treasury company in the UK market, Smarter Web is well positioned for rapid growth, and with a current Bitcoin stack of 2,878 Bitcoin, Smarter Web is large enough to successfully issue digital credit to be the amplified Bitcoin provider for the UK, and small enough to provide exciting Bitcoin per share growth in the coming months and years. JPMorgan warns of $165 billion quarter-end rebalancing wave. JPMorgan has issued one of its largest quarter-end rebalancing warnings ever, projecting $165 billion in forced stock selling could hit markets by June the 30th as pension funds and sovereign wealth funds mechanically adjust portfolios. US pension funds could sell $55 billion, Japan's GPIF around $60 billion, and Norway's sovereign wealth fund approximately $40 billion to restore target allocations after stocks outperform bonds this quarter. The warning is nearly 3 times larger than JPMorgan's September 2025 estimate of $57 billion. However, history suggests caution in assuming mechanical selling will pressure markets. That's today's Bitcoin 5. Let me know your favourite story from today in the comments below, and subscribe now so tomorrow's update lands directly in your feed. I'll see you tomorrow.